we're just seeing the panelists that we have for today. Gerry, Tim Dickieson, and Lena Koke from Axess Law. Tim Dickieson is from Preferred Appraisal Services. And of course, Gerry Hogenhout, my good friend and co-host of Real Estate Cafe, David and Gerry's Real Estate Cafe. So this is the new normal, guys.
Yeah.
We get together on Zoom calls now instead of in person. Nobody infects anybody. And
hopefully we don't have to cancel the in-person forever, but for the time being, I guess this is how we communicate.
Howard Landau keeps texting me. Howard, if you can see us, you're on, buddy. We've got to get rolling here. Well, we're up to 56, 57 participants. So this is really great. So, Michael, we cannot see you. So we wanted to do a quick commercial message with Michael DaCosta, but if we can't.
We don't have a video option here.
All right. So let me take one more look at this. No, you're as active as I can get you. So we'll have to try this again. I'm just going to say briefly, Michael DaCosta is from Fortune's Jewelry on Avenue Road. They've been there for 35 years. And he's come out over a year ago. He came out with this Novon collection, which is an online opportunity where you can build custom jewelry and do your own thing. So he was ahead of his time. And I reached out to Michael because I know he had this great line, and I purchased some jewelry. Well, one of my daughters actually built her own custom piece from his website, novoncollection.com. And I said, I heard that in China, after things got better, and by the way, I heard they're getting worse again. So I don't know if that's what's going on, but that after people spent time in close quarters with one another, the divorce rate actually spiked over there. And I thought, there's an opportunity here for us to sort of make things better in our lives and to improve on the relationships that we have. So, and hopefully one day we will all look back on this experience with some positive feelings about if we're lucky enough to have family and people we care about close to us. Hopefully we'll have an opportunity to look back at it closely. So let's get down to business here. We've already got questions coming in, and we haven't had a chance to start talking. We got a question from Terry Wallman. But before we get to the questions, let's do an introduction, and we'll get to it. So Gerry Hogenhout is a CPA. As you all know, he's an investment specialist. Gerry, let's start with you. We wanted to talk about, to get things going, is what should people be doing with their investments? A lot of people, if they have money in the stock market has tanked, for lack of a better word. And we know it's never a good idea to buy high and sell low. So what are some of the things that people should be considering?
The crystal ball, yes. Do I have all the answers? Well, first of all, I think it's a good time. What I'm telling clients, is to really take an inventory of what they have. Anybody that knows me knows that I'm not a big fan of the stock market. So I certainly don't want to be opportunistic and take this time and go, see, I told you so. But people should really question their use, especially the complete use of their portfolios of the stock market. We saw this in 2008. We're seeing it again. It did recover in 2008. Fingers crossed that it recovers again. But anyway, when we look at alternatives, what do we do? What I say to clients is, if you need money, you obviously have to take money out of your investments. If you don't need money, then my best advice is to stay invested in the stock market at this point until we see the recovery. Okay. The system, the government cannot let the stock markets fail. Okay, so they're basically breaking the bank to prop up the economy. And this is an interesting example of what they're doing, because normally they'll adjust interest rates, they'll throw money at the economy to stimulate something, housing market or something, or spending. This is not the case. They're just throwing money at the market to basically put food on people's table. So it's a very interesting scenario we're in. The one thing I would really suggest to people is if you're in the stock market, you should really consider, again, stay there if you don't need your money until we recover, but look at the cost of the management of that money, okay? Again, I don't want to pick on banks, but I will, and investment companies. They're charging you 2.5% to manage your money and watch it go down and down and down, okay? That's not right, okay? There are better options to stay in the market and at least reduce your management expense. Okay, robo-advisors, okay, we're all isolated, we have time to learn, okay, so my suggestion is people go learn about robo-advisors, okay, because yes, you're in the market, but the management fee is much less, okay, so my suggestion to clients, if you don't need your money, don't take it out. If you're in the market, stay in the market, look at alternatives such as robo-advisors to at least reduce your management expense ratio of that money. Also, a good time to really look at why you're in the stock market. Okay, anybody that knows me knows I'm a fan of real estate related investments. The clients that I have invested in real estate investments are basically unaffected with all this, the proper type of real estate investing. So that's the good news. The clients who are in the stock market are losing half of their money. So it's a good time to educate yourself about other options. If your advisors have kept you in the stock market, which again, I don't agree with, but if that's the choice they have made for you, you should really take this time to learn a little bit more about different types of investments, specifically real estate, the right type of real estate related investments. Real estate income trusts, the proper types of real estate income trusts are golden in these crises. They're based on rental income. And of course, there's a concern. We've all watched the government say, hey, don't worry about paying your rent. I wish they'd say it in a different way. But there's certainly tenants out there that are probably going to take advantage of that. So how does that affect a real estate related investment? And that's a concern. I'm not saying it's not. We deal with a lot of companies that have a lot of apartments. So when the rents are concerning, it certainly affects the fund. But those rents, even if they're missed, they're not lost. Okay, yes, you can defer. Landlord can't kick you out. But you can't just stay there and not pay your rent. So even if you don't pay for April, those of us that are landlords, we were, April 1st came and we were all concerned to collect our rental income. Most of us did. Some of us have issues. But you can't just have a tenant staying there forever. Sooner or later, if they don't pay their rent, they're going to get evicted. And a lot of times when these tenants have stayed in these apartments for a long period of time, they're probably paying undervalued rent. So again, I'm not hoping anybody gets kicked out of their apartment, but if that's the end result, that apartment unit is going to be replaced with a higher rent. So from strictly an investment point of view, which is what I'm talking about, there's an upside. So
Gerry, there's a couple questions that came in for you while you're on the topic. So the first one is, and Terry, we will get to your appraisal question in a little bit. But while we're talking to Gerry, the first one from Alexander Bimman is, what kind of commercial real estate are open and prudent for a small investor, say somebody who has $100,000 to invest during COVID-19?
Okay, I did say in my little talk there, the right kind of real estate, okay? I would stay away from commercial real estate. I wouldn't touch it, okay? Even more now. That was always my opinion before, and even so now, okay? As we all, let's go back to commercial real estate and Target, okay? When they came to Canada and all of a sudden they left, okay? That left a lot of empty commercial space. I've always said I don't want to touch commercial space because the bricks and mortar, type of retail and commercial activities is going down. Now that we're all isolated, we're all learning how to use Zoom video conferencing. Most of us that are in the let's call it the paper pushing business, We can do so much now with technology. We don't need bricks and mortar as much as we used to in the past. So to build an investment strategy around a commercial type of building, I wouldn't do it. So I don't even know the answer to your question. Where is a good commercial venue to be investing in? My suggestion to everybody: residential real estate. Everybody needs a place to live. We're still bringing in 350 new Canadians every year. I don't know how this is all going to impact that, but as we continue to bring people in Canada, as we've seen it in the past, it's just fueled the rental market. And to build an
Okay,
investment
Gerry,
strategy
I think you've kind of touched on the second question that's come in from Nav. He's saying, would you prefer an apartment REIT over a diversified REIT? So I guess the answer is basically.
You know, I make no secret. My favorite type of investment is a good, in the right area, proper location, geared to the right type of income level, rent level. So $1,000 to $2,500 monthly rent, residential real estate income trusts.
Okay, Gerry, you've been getting a lot of inquiries lately about some of the government programs that came out.
Yes,
Do
yes.
you want to talk to that before we move on? We'll talk to Tim shortly about appraisals and start getting some of the other real estate stuff. But just give us if you would, what are some of the programs that are available? How do people tap into those?
Yeah. Okay. So as we all know, we're all watching the TV, and the message is the same. So I'm not going to tell you anything that you haven't seen on TV. But to kind of consolidate everything and to simplify it all, there's kind of 3 programs that they've now created, and they've changed. They've been bouncing around. Some of these programs that I'm going to say talk about replace programs that they initially brought out. So today, and keep it simple, the programs are geared. One of the programs is geared toward employers. Okay, so if you're somebody that employs people, there's a program for you. Another program is geared to businesses that need to borrow money. And the third one, the more common one, is the Canada Emergency Response Benefit, CERB, they call it. Okay, so let's talk about the program that they've designed for businesses. Okay, so basically the government is saying on that program, if your revenues, okay, gross revenues have declined by 30% over the last year, from this March to last March, or this April to last April, you qualify to get 75% of your payroll paid. Okay, and you can actually use that to pay 100% of your payroll. So whatever you're paying somebody, so if you were paying them $1,000, 75% of it is $750. You can use the whole benefit to pay that $750. Okay, so if you're a company out there or a business that employs people, if you still employ them, kind of doesn't make a whole lot of sense to me to lose 30% of your revenue and still keep all your employees, but that's what the program is designed to do, so you can keep your employees. You can tap into this program, and you know, we can get your payroll paid. So that's a good one. There has to be a 30% decline in your sales. Now, is that fair to startup companies, businesses that, you know, had no sales last year or very little sales? It's not fair, and those issues have been addressed, and the government has indicated there will be some further commentary and discussion coming out in regards to those type of businesses. The second one, the loan program, and this is kind of interesting. So if you're a company, and the one problem is you need $50,000 of payroll to qualify. Last year, you would have needed $50,000 of payroll to qualify for this program. And if you do, the bank will give you, the government through the banks will give you $40,000, no interest. Okay, and actually you only have to pay back $30,000 of that. So you can actually get a $10,000 tax-free benefit. Okay, so that's for businesses. If you had $50,000 of payroll last year, then you can qualify under that program. Okay, the third one is the more common one that basically affects us all. Okay, and that's the Canada Emergency Response Benefit. And that's basically, I'm going to cheat here a little bit, and I'm just going to kind of read here. So to qualify, that's the one that's going to pay us $2,000 a month, okay, for 4 months. Okay, so that's $500 a week for 16 weeks. Okay, The application process starts tomorrow. Okay, tomorrow we can start applying for this. The government has basically downloaded it to the bank. Okay, so they're basically saying, go to your bank, go fill all the forms. And what the government is doing is they're creating a structure, but there's a lot of details that are vague. So there's so many questions. Do I qualify? Is this qualified? Is this da, 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 da. I mean, I don't know the answers to them all because the answers aren't there. So there's a framework in place. The banks are giving leeway to administer this through their banking system. So again, the advice I have for people, go to your banks. Okay, who qualifies for this? Okay, so I'm just going to cheat here a little bit and tell you who qualifies for this. This is, again, designed towards just the average person. Self-employed people will qualify. Okay, so I'm just going to cheat here a little bit. So it includes employers, okay, individuals, taxable corporations. Hold on, sorry. Okay, so includes anybody. Hold on here. So basically anybody that has a loss of income, okay, it's very general terms. Anybody that's lost money because of COVID, okay, which probably encapsulates everybody, can qualify for this $2,000 monthly benefit, okay? There's been a lot of question. This kind of works with the EI program. So people that were laid off, you know, they would go apply for EI, they drop the waiting period, and then they evolved this thing into this curb thing. So the way I understand it is if you're laid off, you have to file for EI first. Then you can qualify for this $2,000 a month. For some people, the EI route would be more money. Some people, it would be less. So there's still a little confusion out there about if somebody was laid off, can they go and access this $2,000? The answers I've got so far is you got to start with the EI application. And then from there, if you're still in need of money, you can go to this CURB program. But it's administered through the banks. So my suggestion, don't everybody reach out to me for all the answers. You go to your bank, okay, call them. They have been empowered by the government to administer this program. Obviously, we watch the news every day. There's lots of information on there. There's lots of information online. All these detailed questions about, does this person qualify? Does that person qualify? Call your bank, okay? So those are the three programs that the government has brought out. $100 billion injected into the economy. Crazy. I mean,
okay, Gerry, thank you very much. That's great. We have another question for you, but we'll get back to that later. I promised to talk about a couple of things relative to mortgages, and there's a question that came in from Ravi Thacker with respect to mortgages as well. And if you do defer, will it hurt your credit score? So first of all, just talk to that briefly. So I think most people have heard by now, there's lots of opportunities. The banks on both owner-occupied and rental properties, although I've heard some people complaining that the banks were and the lenders were not as considerate where rental properties. But I think, you know, you have to be in a position where there's a reason for it. You can't just call up and say, oh, can I qualify for a deferral? You know, if there's a job loss or if your tenants aren't paying, you're going to have a better chance of getting a deferral. And the obvious thing, which I'm sure most of you have heard by now, is that it's not free money here. You're still going to have to pay interest. So at the end of the deferral period, your payments are going to go up. And the other question was, will it affect your credit score? Well, it should not affect your credit score. I mean, if you have an arrangement, I would get it in writing, then it should not affect your credit score. Is it possible with the banks and other lenders, as busy as they are, that they make a mistake and report it as a late payment? Sure, it's possible, but if you have your agreement in writing, you can always reach out to the credit bureau later. Take the deferral if you need it. If you don't need it, I wouldn't take it. The banks and other lenders are busy enough. Mortgage rates, strangely, even though prime rate has been going down and down and down, Mortgage rates have actually started creeping up, and the main reason for that is the banks are concerned about their profitability. People aren't borrowing money for business loans and so on. It's hurting them, and they're concerned. I do think, I must say, I feel that there's a little bit of a collusion going on between the banks. They all seem to raise their rates at exactly the same time. I do believe that they're doing what they can. If people are looking for free money, this is not a free money opportunity. You know, if you're holding stock in Royal Bank and Bank of Montreal and their stock also went down, you wouldn't want them to be giving away free money. So if you don't like dealing with the banks, there's other lenders out there, but most people do get bank money when they can because it's usually the cheapest money available. So, but rates are still very good, very low. So there's opportunities if you do want to buy, and you can still borrow money. There's private lenders. You know, there's undoubtedly everything that's been going on has sent a very serious shockwave through the lending community, both where institutional and private lenders are concerned. But I'm getting emails on a daily basis still from both the institutional and private lenders that I deal with. They want to put out money. Obviously, construction money now is probably going to be on hold because now construction is being put on hold unless it's an essential or city project. From what I understand, this is more recent news. But yeah, there's money out there. And the other thing, and we'll touch on this when we talk to Lena in a bit, I was asking Lena, you know, nobody's talking about this, but if you're a private lender and all of a sudden your the first mortgagee is deferring payments for 6 months, and you have somebody who's in a difficult situation and maybe unable to pay, and on top of that, the possibility that the market goes down, you know, you could be kind of nervous if you're a private lender. But having said that, they are still looking to put out money, not at the same loan to values. Mind you, I did see a lender who's still advertising they'll do up to 85% on a private mortgage, but probably want to see a pretty squeaky clean application for that to happen. But people are going to be looking for money, and private lenders love putting money into mortgages because they know exactly where it's going if they see the property and so on. So good opportunities for both borrowers and lenders still. Okay, so that's the story on mortgages and rates and lending. Let's jump over to talk to Tim. We've got Tim Dickieson from Preferred Appraisal Services. He's got 16 years experience appraising properties. And we want to talk to him. He's been busy like crazy. Tim, what is going on out there? Why are you so busy? And what is happening different now? You can't get access to properties. How are you completing your work?
Well, we're trying to figure out, I'm assuming we're so busy because people are kind of panicking and early refinances and trying to draw equity out in light of all the situation. Basically, as you know, a full inspection, we go into the homeowner's home, do a full inspection. That kind of continued for the first few weeks, and then there was a lot of from our appraiser side, my appraisers were concerned. Also, the homeowners were concerned. So through pressure, the banks were almost forced to accept a modified appraisal, which is an exterior inspection only. So our appraiser will go to the property, do our exterior measurements, pictures, and then interview with the homeowner and pictures. The homeowner would take pictures and email them to us. At first, the banks didn't like that idea because, of course, you could send in falsified pictures of, you know, higher end finishes. But they've kind of switched now to a drive-by, which is we don't get out of the vehicle. The difference between the two, a full modified is an exact figure for an appraised value. So we do our adjustments based on 3 comparables. A drive-by is a value range. We would still take 3 comparables, but we don't utilize adjustments, staying within the neighborhood to try to give, you know, as close a range as we think the subject property would be. And again, I think from a mortgage side, that's a lot to do with loan to value of what the bank will accept.
Tim, what's going to happen if when the number of sales go down and there are a lack of comparables? What's going to happen to values at that point? How do you come up with a value? What do you think the impact is?
Yeah, we're kind of, as we discussed, we're kind of in cruise control right now because we're utilizing comps from the fall. Typically, lenders want 90 days. If we have to expand further, we can. Right now, there's enough comparables available. But as we know, using the Toronto market specifically, it was actually up the first part of March, and then it's had a dramatic drop of, I think it was around 35% in sales for the last 2 weeks of March. So with the ripple effect, we're going to start to feel that as appraisers probably 2 to 3 months down the road with nobody buying or selling. So at that point, our comps become limited and we have to go back further, and we utilize something called time adjustments, which is pretty technical to get into, but it's basically depreciating the value. So if a home typically in a good market would have sold for 700,000, utilizing the time adjustment, we may be shortchanging sales to 500,000-600,000, depending on how much of a fallout there is.
So that could have a very serious impact on people, even though the values may not have actually gone down. That could almost create the effect.
Exactly. It's a lot of fear, a lot of speculation on the market. I was hoping, based on the news last week, you know, it might be a shorter lockdown. When he came out with 18 to 24 months, you know, that puts a lot of fear in buyers and sellers. So, I mean, nobody wants to buy a home and have it fumigated, and you know, if you're fearful of that, it really puts fear in who's buying and selling. And that, you know, like I said, I thought there was a window of opportunity where we might hit the spring summer market and just a little skip and away we go and people get back on track. But not to be pessimistic, but like I said, I think we'll feel more of this even if things get back on the ball. Come the fall, refinances and sales might be a little affected temporarily until it has a correction again.
So, Tim, do you think a lot of these banks will just be more willing to accept drive-by appraisals? Because do you still go into houses and do the full appraisal? And
no, we on a limited basis. If it's a vacant property, we're allowed to go in utilizing a lockbox. But again, because sales are dramatically dropping, those are getting few and far between. New construction obviously is heavily secured. They don't want anybody in there. So drive-bys seem to be the way that the banks are going. And I think we've tripled. On a typical month, we may do between 350 and 450 appraisals per month. And last month we did 750. So it's really dramatically gone up. And whether that, I can't see that lasting. As I say, I think it was a knee-jerk reaction of people panicking. So it's likely going to slow down as the months progress.
Tim, if the lender wants interior photos, I mean, can that still be done? I've heard some appraisers are coming up with different ways, you know, whether it's through video conferencing with the person inside the house, getting them to take photos. I mean, is that happening, and is that open to potential fraud? I mean, if you don't see these,
I heard where the real estate industry now, instead of going into the houses to show the houses, they provide a virtual tour of the house, and then that
Sure.
becomes conditional. So if the person wants to buy the house, it becomes conditional on them actually physically going into the house to make sure the virtual tour matches what the real house is. Tim, can you shed
Yeah,
me that?
that's true. But again, as Lena would likely know, our appraisal is a legal document, so it's pretty much littered now with all kinds of assumptions, hypothetical situations, and it makes it very difficult in that regard because we're the eyes of the bank. So if we're not physically on site to inspect, even though it's a virtual tour, that we may get to that, and by all means, this may change our industry moving forward forever. We're not sure. But like I said, the banks typically want the appraiser on site for the inspection. So, but that's the way basically we're doing it. We're receiving emails with photos from the homeowners. It's creating a bit of problem because time constraints. People take their time. They're not used to taking the photos, so we're having to go back and say, no, can you please take a photo of this? And a lot of people surprisingly don't know what a breaker panel or the different types of heating systems and what to take pics of. So yeah, it makes it a little frustrating.
So are there, is there standards different for a refi compared to a new purchase?
In regards to the full appraisal?
Yeah. Will they
No.
just more or less take a drive-by for a refi and maybe a higher?
Yeah, so a drive-by, and I'm not a mortgage specialist or nor do I work on that side, but typically the way it's been explained to me over the years, a bank will accept a drive-by appraisal or what we have a desktop if there's less than 50% loan to value on the property. So like I said, we don't do adjustments in those types of reports. We give a range. So it'd be like being able to go on MLS.ca if you're a little bit knowledgeable as a homeowner, pulling some solds. They can't be active listings. They have to be solds because that's truly the history of what's selling in the area. And, doing a range of a low to a high based on condition.
Tim, predictions for the future of the real estate market in the GTA?
I think it'll rebound like it always does. I think people have to maintain patience and, it will, like Gerry said, the stock market, it's something that will correct and it will come back. And unfortunately, it's something we all have to kind of live through. And the chips are going to fall where they fall for now. But I think panicking is not something that will help any of this.
I'm just reading some of the questions we have that came in from the audience. Question from Terry Wellman: do appraisers prefer 30-day timeframes or longer timeframes for comps?
She prefers, sorry?
Do appraisers prefer 30-day timeframes or longer timeframes for comparables?
Well, typically we want to get 1 day if we can, as close to the subject and as fresh of a sale as possible, because we're giving a snapshot of the market as realistic to the lender as possible. So if we have to go further in time, that's more of a history and things could have changed, which it reflects on the area and the number of sales.
And I think you are saying whether there's an internal inspection or drive-by, again from Terry Wellman, the uncertainty and lower number of sales will drive down market values for a period of time.
Well, that remains to be seen. We'll use something that we call paired sales. So if we have to do an appraisal, let's say when we feel there's been no sales and the market's kind of crashed, let's say in a month or so, if we can find a sale that's currently sold, we'll take a sale from when things were productive and we measure the difference in the sale. Obviously, we have to choose as close to the subject and the market that we're dealing with. And that gives us an indication of the fall of the market.
Okay, Tim, I want to thank you for taking the time. I know you even had to run today. So, I mean,
Yeah,
if
no
you
problem.
have to run, we understand, but there are more questions actually for you, and you might want to weigh in on some of the discussion. But I think we should move on now and have a little chat with Lena. So, thanks again, Tim.
Thanks for having me, and I'll hang in here as long as I can.
Okay, very much appreciated.
Thanks.
So Lena Koke, JD Law MBA, Chief Executive Officer of Axess Law Professional Corporation, and Axess is AXESS. 7 locations across Ontario. Axess Law is on the forefront of paperless transactions. I know they've been moving in that direction for quite a period of time. Affordability and mobile signing. So they've been sort of preparing for something like this, maybe not intentionally, I don't know. But Lena, welcome, and thanks a lot for joining us. Please tell us what is happening out there from a legal perspective. Are you still able to close transactions? And if you can't meet with people for signing, how are you doing it?
Well, good morning, David. That's a great question, and that's a question we're getting from a lot of people right now. What I would say is short answer is yes, absolutely. Land registry system is open. We're open for business. What we have observed is that the number of purchases and sales we're doing have vastly decreased. People are obviously, they're not wanting to necessarily buy or sell a home right now. Even, I think yesterday or the day before, Toronto Real Estate Board came out with a notice saying open houses are now prohibited. So I think what we're seeing is a lot of sellers sitting on the sidelines and saying, I'm just going to hold off until I can properly market my property, and we'll be off to the races. I tend to agree with what Tim had said in the fact that we're seeing a slump right now in the purchases and sales, but I think we're going to see it eventually. I don't know the timeline, but hopefully sooner than later we'll see it rebound. It will go back up the way it has been over the last number of years. We are very, very busy with new mortgages, refinances. That is seeing sort of the opposite trend that the purchases and sales are seeing. So people are wanting to tap into equity that they have in their homes. The renewal periods are coming up. It is not even business as usual. I'd say it's, double timing it. So we're very busy. We've always been very, very focused on allowing our team to work virtually, allowing our clients from across the province to be able to sign their documents virtually whenever possible. So we're, the situation is obviously a challenging one, and that everyone's going through, but we happen to be luckily very fortunately set up in that operationally hasn't really impacted us at all. So to answer your question on, how are we actually doing this right now? It really depends on the type of transaction and the lender. It often does come down to the lender. So our preference is always to do things as virtually as possible, particularly right now. The last thing we want are people coming out of the home having to meet with us in person. It's not, it's just not ideal. So whenever we can, certainly for all of our sales right now, for any other type of, survivorship transfer, a simple transfer of title, that can all be done entirely virtually. The Law Society of Ontario came out within the last month, I think it was about 3 or 4 weeks ago, and said, we're absolutely okay with you IDing clients virtually. We're okay with you commissioning documents. For those of you who aren't familiar with that, commissioning documents essentially is just me witnessing you sign your signature and take an oath that what you're signing is correct and accurate. So we're able to do all of that virtually right now. The Law Society is on side. All of the title insurance and insurance companies have special insurance in place just to ensure that, there isn't a fraud associated with that. So we're doing a ton of virtual closings right now. Now, that doesn't take into account the fact that there are still lenders, and I would say a lot of private lenders and some of the institutional lenders as well, who want physical documents and wet ink signatures. Speaking from someone who's been doing virtual signups for a long time, not necessarily the ID verification. I can say that I think a lot of the reason for that is just habitual. It's just what we're used to. And I'm probably one of the bigger proponents to say, hey guys, let's kind of come together during these difficult times and let's figure out what concerns you have. Because if we can do this virtually, and we work with a ton of lenders, we do, you know, I'd say 400 or 500 closings a month, and we work with a lot of lenders. And the ones who have sort of embraced this virtual model, they're able to get their finances closed, the refinances closed a lot quicker, and there are just less hiccups from the client side. The client isn't trying to, you know, find a printer or scanner at home. We make it as smooth as possible, but it's just a much smoother process. So we've been working with a lot of our partners and just helping onboard them into the virtual process. So that's very seamless, very quick, very easy. We can do it across Ontario. Now, there are still lenders and people who are not comfortable with that, and that's fine. I'm not going to, you know, we're not going to push anyone to our way of doing things. So we have a mobile network as well across the province, where we have a team of people who are still willing to go out to borrowers' homes and have the documents signed. These days, because of what's going on, we have a lot of protections in place. So there's a whole suite of protections we have in place, whether it's wearing masks, whether it's driving out to the home and placing the documents in the mailbox and going out to the car and actually reviewing it by phone, a lot of video conference, and then picking up the executed documents from the home and having them sort of ID us from 6 feet away. So it's still possible. We can do this across Ontario. Obviously, this is not instantaneous like virtual signups, but we can usually 24-hour turnaround is usually possible.
Lena, you still need to ID them from 6 feet away. I mean, I have somebody, they're stuck in Costa Rica, and we're trying to arrange a mortgage for them. And I'm, you know, so we were thinking that if we sent them the documents electronically, the lawyer witnesses the signing and confirms the identity. The lawyer happens to know the borrowers in this case, and then we courier them back. Is that significantly different than if the borrower was here in Canada?
No, that's an awesome question, and we are dealing with a number of our own transactions like that right now, because people are, when they're out of the country, they're not getting back in right now. So great question, and I have a good answer that you're going to be happy with. We have no obligation right now to physically see the ID. Sorry about the background noise, working from home. So we have no obligation to physically see that ID right now as far as the Law Society is concerned. You can, it's as easy as the lawyer being sent the ID by email, as long as your lawyer is comfortable and actually knows who the client is and comfortable actually checking the ID. And you know, maybe it depends. There's no sort of you know, predefined questions. But we've done this many times for clients who we don't personally know since the Law Society's put out this communication. We'll call, we'll ask for copies of the ID. We'll then do a video conference and ask them to flash it on the screen at the same time, front and back. We'll ask a bunch of predefined questions, and we usually have geolocation on the video call as well. So as far as the lawyer is concerned, the Law Society is concerned, you are completely in the clear. The only possible hiccup, and this should be easy to overcome, is the lender. Does the lender say in their instructions, you must physically meet with the client? If they do, ask them to revise it.
Okay.
Lena,
We're doing these all the time right now.
Lena, if I could just ask, I know my own lawyer, he almost embraces the Law Society, that the changes that they're basically forced to make given the current situation. So is there a lot of changes, or did the Law Society make a lot? Like, I know in my tax world, the authorizations for filing tax returns, the CRA always frowned on and really never allowed us to do online authorizations. Now they have, and we're not sure if it's temporary or permanent. Hopefully it's permanent. But did the Law Society make a lot of changes in this new world now, or?
So I can tell you exactly the changes they've made. The most important ones are that they were always sort of sitting on the fence with the whole, can I commission something virtually? Can I check ID virtually? The reason that we have never been able to virtually check ID has usually been a lender requirement. So there's been this big gray area surrounding the Law Society about a year ago, because so many lawyers were playing in that gray area and saying, well, I'm just going to do the signups virtually because it's a gray area and I'm going to take the chance. They came out with a recommendation about a year ago saying, well, we are going to interpret this particular piece of legislation that talks about how things need to be executed as saying you have to physically do it. So that kind of killed everyone's dream. Now, in the wake of coronavirus, what's happened is they've come out and said a couple of things. The first is witnessing IDs, which is the most important one, can be done entirely virtually. So that's new. So what they're doing is they're looking at the legislation and saying, we are okay with you interpreting it this way, which they've never said before. And that's always been the biggest speed bump. The second one has been all sign-up documents for any type of transaction, as you guys probably know, have statutory declarations, which have to be commissioned. So that means that the borrower or the seller or the buyer is making a promise, making a declaration that they're swearing to be true. And that is what the Law Society has always said you have to do in person. Now they've said, as long as you're satisfied, Mr. or Mrs. Lawyer, that the client isn't under duress or have mental capacity issues, you can do that by video conference. Now, it's not, it's wonderful that they're finally doing it. It's kind of unfortunate that they've had to, something like this has had to be what pushed them into doing it. But it's notable to say that the provincial government has actually been very progressive. We've been in talks with them for over a year, and they actually introduced a bill to do exactly these things, which hopefully, if they get back to work soon, is still going to happen this year. So that will, I think the Law Society has kind of jumped on board with what was happening anyhow, but fortunately, we can now use it. So they've done those two things. The third thing, which is very interesting and may pertain to real estate as well, but is brought forward in a different context, is tomorrow there's a case going forward in front of a judge, and I'll touch on that in a second, because a lot of people think that courts are completely closed, which isn't the case. It's an emergency motion that's been brought forward to allow the witnessing of wills to be done virtually. Because as you can imagine, you've got a whole bunch of people sitting at home and they're like, oh, darn, I've been putting off doing my will for the last 30 years. Now I'm at home watching CNN or CBC, which is just, throwing me into a panicked flurry because that's all they cover these days. And now I better get my will done. But I don't have a witness at home because I can't really use my family members. You're not supposed to do that. So a lot of people, what they're doing is going to the backyard and, asking their neighbor over the fence with a glove on to witness their document. So this motion will be very interesting because it will say whether documents can now be witnessed virtually. Again, there's a little bit of gray area there, but these are the types of changes that are happening. And as far as real estate goes, as long as the lenders are okay with it and they've, sort of input in their instructions that we do not need to physically meet with the client or check IDs physically, we can do everything virtually. Instantaneously, we are doing 24-hour closings all the time. Okay,
Lena, wanted to ask you about enforcement. I know some lenders are nervous, like you alluded to that, the courts still being active. And also there was a question about your rates from Michael Evans, which I think plays to your strength. So you might want to address that too if you want.
Thank you. I didn't want to turn this into a sales call, but I'll never turn away an opportunity.
Well, he asked, right?
So let's I guess touch on the question that will be of everyone's interest first. So mortgage enforcement. Despite what people have heard, all courts are not completely closed right now. So Superior Court, if we want to talk about that, because that's typically the court that of interest, judges are allowed to deal with what are called urgent cases right now. Now, unfortunately, mortgage enforcement is not currently in that basket of things that they're allowed to deal with. They are broadening that scope every day. So this week, they're expected to broaden the scope of what they're permitted to deal with as well. They're also quickly getting on board with, what can be filed electronically, which is, again, allowing people to do more things. Now, in the context of what you're discussing, private lenders and how do we enforce mortgages, this is something I can tell you I've looked into. It's close to my heart because we deal with a lot of private lenders, and I mean, I'm an investor in private mortgages myself. I think there's a ton of great opportunities out there, you know, to help people and help ourselves at the same time. So there is an issue. So let's talk about the different types of mortgages. There's a private mortgage for a residential property, and there's a private mortgage for a commercial property. So those for residential properties, you're going to run into more issues because, as you guys probably know, nobody's allowed to be evicted from their homes right now. I don't know if that's a rule in other provinces, it likely is, but you can start the process, but nobody's going to be evicted. Process servers aren't working. Sheriffs are definitely not doing evictions. So what you can do, and I know, David, you had sort of alluded to this before our call, you said, I heard that for commercial mortgages, you can issue a notice of sale and basically take over the property, but not for residential properties. So I think probably that's not entirely true. Probably what that was alluding to is the fact that you can essentially start both processes, but because there's a prohibition to kicking residential tenants out of their home, you can only get so far. So the way it works is right now you can file a notice of sale. You can go, that's an over-the-counter thing, that's open. Is it going to be open next week? Who knows, but it's open right now. So you can actually file a notice of sale, which is typically your first step in mortgage enforcement right now. What the problem is that things stall out after that. So the next step in the process is that the defendant, which would be the borrower, would go and turn around and they would have 20 days to file their defense. Right now, there's a complete pause on limitation periods, which means that 20-day period isn't starting. So I've now filed my notice of sale, but I can't continue in the process until they call it an extension of the limitation period, because it just keeps getting pushed right now, until the court order putting a pause on those limitation periods is lifted. You can get first in line, so you can get that in there. You have your notice of sale, but nothing's happening until that limitation period hold has been released. And that may happen tomorrow. It might happen next week. It might happen in 3 months. Nobody really knows how quickly the courts are going to sort of become agile. What I'm seeing happen with most of our private lenders is they're saying to their borrowers, they're saying, look, if you're having a hard time, defer your first, if they're not sitting in first position themselves, but keep paying hours. We have higher interest. I mean, the penalties are higher. Keep paying hours. Now, hopefully, you know, the application was a clean one and the loan to value is decent, but that's sort of what's been happening. Our private lenders aren't hugely concerned because it's still sort of the beginning of what's happening here, but all lenders do have a requirement to act reasonably. So what you're not going to see is someone sitting in first position, deferring and deferring and deferring, and all these penalties and fees start to build up, and it's going to eat away a significant portion of the equity that would otherwise be owed to the person in second position. Because what will happen then, and they know this, is that the person in second position is going to turn around and say, look, you acted unreasonably. Plus, you only have X security in the home to begin with. And because of that, I'm put in a worse position. And that person in first position, that first lender, will then be in a lot of trouble and have to turn around and write a check to the person in the second position. So I would not worry about it. Look, as an investor, I'm not hugely worried about it. I think it just has to be managed properly right now. You know, get them to defer that first if they have to and keep getting your checks.
Okay, Jimmy's asking, can private lenders still rush power of sale? And somebody else asked if you can still put a lien on a property.
So rush power of sale, same thing. You're going to run into, in order to be able to do the power of sale, you have to give the defense, who is the borrower, an opportunity to respond and file a defense. And because they're given usually 20 days to do this, and there's a pause on that time that's ticking down to 20 days, you can file it, but you cannot get to power of sale. You're going to be held there until they release that hold. Sorry, what was the second part of that question?
Put a lien on a property.
You can file a lien, but you can't go all the way through to, we can register a lien as the law firm, but when you file the documents at court, you have to wait for them to essentially be reviewed and stamped and brought back to the law office before we can do our registration. That's not happening right now. So I suspect that that's something that's going to be happening soon. But as recently as last week, we were given the information that wasn't happening yet.
Okay. All right. So I'd like to go back to the top of the order now, because we had some questions even from before that for Gerry. And then we'll just go around the horn again, as long as you guys are able to hang in. Well, we're not going to be that long, I guess. Tim had to run. I know we had some appointments. Gerry, REITs have frozen their and by the way, Lena, thank you for all those very good answers. Very much appreciated.
Pleasure.
Yeah, and you didn't talk to rates, but maybe we can, if we can get back to that in a little bit, okay, before we close. Gerry, REITs have frozen their distributions these days. Are you worried?
Well, I don't think all REITs have frozen distributions, number one. Number two, am I worried of, hey, listen, we're in uncharted waters. We worry about everything relating to investments. I'm not as much worried about those REITs, especially the residential. Again, I only play in the residential REIT game, not the commercial or industrial. So for a residential REIT to stop their distribution, certainly it's concerning for those that need that distribution for cash purposes. A lot of those distributions are just simply reinvested into the investment, so the investment grows. But with that said, there's different reasons why these residential REITs will stop their distribution. Sometimes they'll do it because we're going to keep the money, because we're going to go buy another building. So it's not just these economic conditions that would stop the residential REITs from paying the distributions. But in today's world, it probably is. Now, if they stop the distributions, it doesn't mean that they're losing that revenue. People still have to pay their rents. They can't just stay in their apartments and not pay rent. So even if they stop the distribution, they should be, in theory, accumulating cash flow, which later will be deployed either as distributions, catch-up distributions, or towards another property. It really, again, as far as the protection of capital, again, when you talk about this, ceasing distributions, we're talking about the income side of the investment equation. I always start with the balance sheet side, the protection of capital. Okay, if they stop the distributions, it shouldn't hurt our capital, our protection of our capital. The apartment buildings that these REITs use protect our capital. What they do with that money affects the distribution of income. So again, if they stop the distribution, it's not that money is lost. Okay, they're stopping it probably to manage their cash flows, but again, people can't stop paying rent. So I'm not as concerned as you would think I would be. I'm concerned for those people that rely on the cash distributions of a REIT to put food on their table. Absolutely, I'm concerned. But most people have these distributions reinvested into their investment, so their value goes up in the business. So not
Gerry, thank you, Gerry. Gerry, how does the government create this $100 billion that they're going to?
How do they create the money? Wow, that's an interesting one. Okay, so here's a lesson in economics. They do not go and print a whole bunch of $100 bills. Okay, they do that to a certain degree. Probably about 1 or 2% of the money that's in the system is actually printed $100 bills. Okay, the rest of it, basically how they create money, it's very interesting. The government will issue and create bonds or treasury bills. Okay, they give these bonds and treasury bills to the Bank of Canada. The Bank of Canada auctions these off. Okay, if you don't understand what fiat money is, F-A-I-T, by all means, Google it today and look it up. It's very interesting. They create money, so they create these bonds and treasury bills, and let's just use $100 billion, okay? They literally are then allowed to write checks for $100 billion. They literally take those bonds and treasury bills, gives them to the Bank of Canada. The Bank of Canada auctions them off. They'll keep about 20% of them in their own bank account so they can write checks for the government. The rest are auctioned off, and they're either auctioned off to chartered banks or investment companies. The chartered banks, when they buy these bonds, that money goes into their bank accounts. And if you understand fiat money or fractional banking reserve systems, they can create the same amount of money. So if the bank buys a bond of $100,000, they can actually create another $100,000. That 100,000 gets paid to somebody. That somebody is going to put it in their bank. Their bank now can create another. So it's just an infinite amount of creating brand new money, fiat money. It's incredible. So that's how they do it. When they sell these bonds to the investment companies, it's in their investment portfolios. And these are the big investment companies. They're Canada Pension Plan, Teachers Pensions, all these pension plans, not only in Canada, globally. When people ask, where is all this $800 billion that Canada is in debt? Most of it is sitting in pension plans all around the world. And on that note, actually, of the I don't know what our debt is, 700, 800, 900 billion dollars. I mean, every day it goes up. Of that amount, there's really only about 50 to 75 billion that's actually overpaid over money that's received. The rest of it, 800,000, is compound interest. Incredible, unbelievable, but that's what it is. It's compound interest that basically creates most of our federal deficit. So hopefully that answers the question.
Okay, thank you very much, Gerry. So I'm just going to touch on some of the other comments and questions that we've got from the attendees. Kay Peterson is saying, we've had appraisers contact us this past week to send them the virtual tour photos that we have done on the properties. I guess that's a real estate agent probably saying that. So yeah, I think we alluded to that. That seems to be working well. I've heard some appraisers they're even looking in the windows, snapping photos, handing their phone to the people. Maybe, I don't know if they put it in a plastic bag or what, but I do mainly alternative lending, and I don't see those. I could be mistaken, but I think those lenders, the B lenders or the private lenders, are still going to want full appraisals. Unless the loan to value is very, very low. That's my take on it. I have a large sum of money that I want to invest. If I loan my funds out now, what would be a realistic interest to charge? Well, I don't think it's going to be drastically different than if you loaned your money out a month ago. Private lenders usually get anywhere from 7% and up, depending on whether it's a first mortgage or a second mortgage, how much equity there is in the property, what type of property it is, and where the property is. If you want more information about private lending, give me a call. Terry Wallman, new mortgage financing versus refinancing. Have you seen a change yet in the mix? Uptick in bank refi or private refi? Well, I mean, I do mainly alternative, and I've been pretty busy. People are looking for money, whether they want to be opportunistic and invest that money, or whether they feel that they've got to move on it now and get it while they can still have their property appraised at current market rates, because we haven't seen any decline yet. I don't think in values. So I've been getting mainly refinances, but that could just be the nature of my business. Lena, I'm not sure from your experience, from what you're seeing, are you seeing more refinances or purchases in the last little bit?
A lot of refinances, and we're doing a lot of private loans as well.
Right. Somebody else asked if lenders are doing refinances or approvals in a more lenient way. Could someone get approved that might otherwise not? And I would say no. They're probably being tougher now. They are being tougher now. They're nervous, more nervous. Now, if somebody has been previously approved and all the conditions are met, it's a good question. And I hear what the lenders are saying, that if they've already confirmed your various conditions, like let's say they've confirmed your income and the deal hasn't closed yet, they're not going to go back and see if you've lost your job or not. That's what they're saying. But from my experience, also a lot of times they don't do the verbal employment confirmation until very close to the to the closing. So I'm not totally convinced on how they would proceed, regardless of what they're saying. That is my take on it. Another question from Terry Wallman. Lena, do you believe in issuing a statement of claim and serving, then issuing a notice of sale, or would the notice of sale be a nullity due to the time suspension of the statement of claim?
So let's say that's a good question. So serving anything right now is a challenge. Some things can still be served by registered mail, which is effective. Process servers across the board are not really working. So serving is challenging. The issue is, of course, even if you do walk down that path, as you kind of alluded to, Terry, you end up stuck in a situation where you filed your notice of claim, but you can't really go any further. So, I mean, truthfully, I think what I would say is, just kind of hold tight. Things are changing so quickly. I would look to see what happens in the next 2 to 3 weeks. I think we're going to see a lot of changes in what we're able to do.
Okay, very good. Another question for Lena. What can a commercial landlord do to tenants that cannot pay rent, i.e. hair salon? We are on a monthly lease.
So, okay, so some of this really depends on what the situation is with the tenant. If you're in a situation where you have a tenant who is considered insolvent under the Bankruptcy and Insolvency Act, which probably is not necessarily the case, but if it is, you can get an assignment of rent from them. In this case, that wouldn't help, because that's more for people who have taken over an entire building and they're now getting rent from other subtenants. So what can you do right now? You can proceed with a notice of sale, and that's it, unfortunately. What I would do if this were me, if I were in the position, is I try to take a little bit more of a human approach at the beginning, especially when you're in a position where we don't have a great hand right now, because any action we take is eventually going to be, so you're going to hit an obstacle until they continue to open things up, which, as I said, could happen tomorrow, could happen in 3 months, but things are changing so quickly. So what I would do, and I've been a landlord for a long time, so both commercial and residential, is try to get a little bit creative and get as much as you can without putting hardship on them. So, I would speak to them. I mean, these days I would have a call with them and just say, look, I know that you're behind, you have arrears. I understand that you're a hair salon, so you're not an essential service right now, so you probably don't have any revenue. Is there anything you can do? And try to come up with something creative, because, at the end of the day, if they don't have any money, you can kick and scream and do whatever you want. You're not going to get anything from that. So sometimes I find just playing sort of the nice person and trying to get creative with them helps. And a lot of business owners, especially people who own small businesses, they have a lot of respect, self-respect. They have a lot of pride. They don't want to be in arrears. It feels like crap. They feel like crappy people. So just trying to sort of amicably, is there something you can do? Look, if I can defer this month, can you pay this month? Try to get a little bit creative. If you have to go legal and the situation is just not good right now, you can go file your notice of sale. As soon as they lift the hold on the limitation periods, you can start the clock running and you're off to the races. There's not much you can do. You can't seize their assets. You can't kick them out. You can just, I think, trying to be creative and play nice until the courts open up a little bit more is probably your best bet. Probably not the answer you want right now, but that's the best step at this point.
Okay, very good, Lena. Thank you. We do have more questions for Lena, but we're going to just hop over to Gerry for a second, and we'll come back to you, Lena. 2 questions for Gerry. Number 1, why would investment advisors leave their money in the market? And number 2, is the temporary wage subsidy taxable income for business?
So to answer the second question first, yes, all those programs that I previously described are all taxable. Except the loan. So the The $2,000 a month is taxable, and the 75% wage subsidy is taxable for next year. Sorry, the other question was, is the investment advisors, why would they keep their money in the market? Well, if you're talking about investment advisors, this is where I get a little angry. And I'll tell you why, is because the investment industry had ample time to pull money out of markets and leave it in, and move it into cash. So if somebody, we knew about this coronavirus for at least 2 or 3 months before the severity hit. So for those 2 or 3 months, my question to the banks and the big investment companies, why didn't you move the money out of the stock market and into just cash? And while we awaited to see what the impact of this coronavirus was, and I guess I know why they didn't, and I'll share it with you, because once they move the money into cash, they don't get paid anymore. Sorry to say it as bluntly as that, but that's the exact reason. So they leave the money in the stock market. They continue to get paid their 2.5% management fees. Sorry, I'm going to go on a tangent here because this stuff really upsets me, because they had lots of time to move people's money over and save the plummeting. But anyway, so they leave the money in the market. They collect their 2.5% management fees. And again, in this case, we had 2 or 3 months to see that money moved over. And while they do that in the background, I don't know if I should say this, but the banks and the big investment companies, what they were doing while they left their clients' money in the markets were shorting the market. Okay, now some of you will know what that means, others will not. What it really means is, while they leave your money in the market, behind the scenes they're betting against the market. So they make more money when the market goes down. I mean, it's criminal, but that's what happened. And that's exactly what happened in the last 6 months. Another question I have, why didn't they shut the stock markets down? Well, everybody's money is plummeting down. Why don't they shut the stock markets down? And again, I get angry about this. They didn't shut the stock markets down, in my opinion, because the more the stock markets go down, the more the big investment companies and banks make when they short your money. So sorry, don't mean to rant, but that's the reality of it. I think the banks and the big investment companies had lots of time to move clients' money out of the market into cash while we sat and watched what this went through. So what happened with this coronavirus.
Okay.
Anyway, that's my rant for the day.
Okay, Gerry, thank you. Appreciate that. Question regarding mortgages. Are privates reducing their LTV and increasing their rates and fees? Well, I would say they're definitely reducing some of their LTVs. And I think that would probably be their first approach. Unless you're a gambler, you might approach it and say, oh, well, let's do this loan, but we'll just do it at a higher rate. But I think for the most part, if a lender is concerned, they're going to reduce their LTV because there's so much uncertainty right now. One thing that we didn't talk to Tim about is that even though the appraisers, the valuations are, let's say, still coming in at about, like they're not showing a decrease in the market, they're going to state on the appraisal that there's, extraordinary assumption is that the market is not going to be affected by the coronavirus, because nobody really knows what the future will hold. And, one of the purposes of doing an appraisal for a lender is that appraiser is putting their name on the line, so that if there's a loss in a future date, and the property ends up appraising at a much lower value than the appraiser said, that appraiser has a responsibility to that lender. And by putting a clause in there that, there's an extraordinary assumption being made here that the future value will not be affected, the appraiser is protecting themselves, but it doesn't buy any additional comfort for the lender. So we need to keep that in mind. There was another question from Howard for Lena. Lena, you noted that liens were not being registered because the court would not return them to the law office. I presume this applies to execution of writs. Please confirm. And can we assume that these are executions of writs that would have started before the limitation period?
Let me try to sort of pick those pieces, those questions apart. So basically, the court put a complete hold on all limitation periods. When was it? I think a couple of weeks ago, 2 weeks ago or so, give or take a few days. So right now, anything that was in process before was put on pause. People generally, I think because most people think that, the courts are closed, haven't been filing a lot of new things. If they do, they go in sort of the same track and get held up there. So can you actually, David, could you just repeat the question one more time to make sure that I'm actually answering all of the pieces of that?
Sure. You noted that liens were not being registered because the court would not return them to the law office. I presume this
Generally, that's
applies,
right.
does it apply to execution of writs?
Yes, that's correct.
Okay. All right. And can we assume that these are executions of writs that would have started before the limitation period started?
That's also right. If
Okay.
anything that was submitted before. Now, again, I think one thing that I really want to make clear is that things are changing every day very quickly. So what may be true today could be opened up tomorrow. And I know I'm repeating myself here, but it's important to note. Don't just say, okay, things are on hold. That could change very quickly. And I think you'll see a lot of people post on that when the limitation periods are sort of opened up again and judges are able to hear a broader scope of things. As of now, those things are not moving forward.
Okay, very good. Thank you, Lena. Question, do you anticipate mortgage rates will continue to go up over the next couple of months? I would say probably not. My mortgage renews in June, and I'm wondering if I should renew now or wait it out. So I would assume that the bank is offering this person an early renewal. That's a really tough call. Listen, rates are good, so I would take them when they're good, because who knows what the future will bring. They could go up, they could go down. So that's my take on that.
If I can jump in on that.
Go ahead, Gerry.
Yeah, the rates. So, in my world, there's four rates that I always try to keep up to date on. The Bank of Canada rate, okay, that's 0.25 now. Like they've dropped that 3 different times. I mean, that's as low as, it's almost going into negative territory, which it won't, but they basically said they're going to leave it at 0.25. We have what's called the overnight rate. That's usually a spread, like it's around 1.5, and that's really the rate that the Bank of Canada and the charter banks exchange money at, and the banks between themselves. So I don't want to get too deep into that, but that's another rate that we always look at. The prime rate, the bank prime, that's 2.45, and then we have the bank rate, which is about 5.45. They usually lend on discount to the rate, but the prime rate is low. I'm not saying variable is better than fixed. Please don't misunderstand that message. Anything I've ever done or been involved in, I always deal with variable rates. I know I look at a lot of the properties and mortgages I have now, and the variable rate, as again based on prime. So some of them are a reduction of at least a point. So some of these mortgages I have are like 1.45 now, which is just great from an investment point of view. Hate to be opportunistic about it all, but boy, these variable rates are as low as they've ever been. So I'm not suggesting variable over fixed. I like variable better than fixed, but I think what David said is exactly right. The rates are low. Who knows if they're going lower? My rule of thumb is when the rates are low, grab them. That would be my advice.
Gerry, there's a question. Any thoughts on buying gold or silver?
As I tell everybody, I stay away from the stock market. Gold and silver, certainly when it was used. When I talked about this fiat money, back in the day, it used to be backed by gold. Now the gold does not support our monetary system. So people run to gold in times of crisis, but again, I don't pick stocks. Gold is stock picking, silver is stock picking. I don't pick stocks. Okay, so I do your research. I wouldn't buy gold. I'm not buying commodities. You can make money in them. Not saying you can't make money in them. You can make a lot of money in them. The stock market is your casino rama. Go gamble your money away. You can make a ton of dough. You can lose a ton of dough. So I certainly don't see that gold is a hedge against anything that is going on today.
Okay, thank you, Gerry. Michael is asking, guys. He was ready to turn on a contractor to build a new custom home on land that we own. Now there's a freeze on residential constructions. Any thoughts about starting new construction once the freeze is lifted?
I can jump in on that too.
Go ahead, Gerry.
Actually, we dodged a couple of bullets. When I say we, one of the things we do in our company is real estate fix and flip. So if the investors have an appetite, we buy a house, we knock it down, and we rebuild it. So I have 2 projects right now. So every day we have a construction crew on those projects. The first bullet was basically when they locked down a number of essential businesses and kept construction and residential intact. So that was good for us anyway. Then Friday, they revamped those essential businesses to basically say new residential. You can't start new residential projects. So my projects are on the go. My construction crew at this point is still able to go to work every day. As Lena said, things change every day. So they could be pulled off the job on Monday, who knows? But for now, we're good. As far as, sorry, David, what was the question as far as should a new residential be a...
Any thoughts about starting new construction once the freeze is lifted?
Well, again, that's a good question. It really depends on where we think the market is going, and everybody's just, guessing. So again, if a business model makes sense, again, our first priority is to protect your capital, any capital. So if there's a business model that makes sense where we can protect the capital, we can either buy it as a rental property, buy it as a fix and flip. If we feel strong that the capital is being protected and there's some risk involved in building the project and the types of returns we can generate, we're willing to take those risks as long as the capital is properly protected. So I'd really have to answer that by saying, if we feel comfortable in the protection of capital, yeah, I'd certainly proceed on it. And I would have anybody else, if they're looking at new residential builds, take the same approach. You want to protect your capital first and then get a rate of return after that.
Well, Gerry, I think also earlier in the conversation, you've mentioned that the kind of real estate you like is where the monthly rent is, let's say, between $1,000 and $2,500, because, those are the types of housing that the average person's going to live in. And there is a shortage of housing, and there's always a demand for housing. So, but if you're in the very high end, this gentleman is talking about a custom home. We also know that when the market is soft, homes that are in the very high end are more likely to drop off than homes that are in the middle end. So that's my take. It depends on the product.
Yeah. So to buy a brand new home now to try to flip it and make money, I mean, that's not something I would really entertain. Not because you couldn't make money, but I'd be more concerned with the protection of the capital. And again, when you mentioned the real estate, yes, I like that. I like real estate related investments on the residential rent side geared towards the low to medium rent. But it also has to be in the right location. My preferred location is 2 hours outside of Toronto. So if you draw a line from London to Kitchener to Owen Sound or really in Peterborough, and that whole 2 hour gap outside of Toronto, you go in there and you buy apartment buildings. The protection of the value of the rent is very strong as they continue to build transportation tentacles from these areas into the city of Toronto. And while they continue to bring immigrants, 350,000 new Canadians into Canada, again, that's be interesting where that goes moving forward. But that creates a strong market for that type of rental market. So to build an investment model around that, I think makes a lot of sense. But you'll buy a brand new home and try to close it in a year and try to make some money on it. I'm not saying you couldn't make money, but it's really not something I would be interested in or suggest.
Okay, thank you very much, Gerry. Lena, we were asking you about, we wanted to ask you about your rates, and then we're going to close off. And unfortunately, we're not going to be able to answer. There's more questions, but I think we need to wrap it at 12:30 because everybody has lives. And but I just wanted to say before we go to Lena to help us close the show out, that we appreciate all of you participating. We had over 80 viewers at one point. We still have 68 people on the line. So I think that's tremendous. We really appreciate you all turning up, and we will continue this, and we're going to address some of the issues that are being asked in future episodes. We'll continue to have a variety of different experts talk about different aspects of real estate and investing. Our aim is to do this on a regular Sunday. Next Sunday is Easter, so we may not do it next Sunday, but otherwise, that is our goal. But in any event, we certainly plan on continuing. So thank you, Gerry, for co-hosting the show with me.
Yeah.
And Lena, thank you so much for taking the time out of your very busy schedule to be with us today. So can you give us a little closing pitch for Axess? I know, and the other thing I wanted to mention is I had the most unbelievable experience with, I don't know if you know the story, with Patricia Fitzpatrick.
Oh,
Okay, because as mortgage brokers, you know, when we're going to get, when we have a transaction, we normally get paid from the advance, and then we reach out to the lawyer and we ask the lawyer, hey, could you please hold back our advance? And, you know, so, you know, she was so prompt and to put our mind at ease, because sometimes these broker fees that the lawyers say they're going to hold back, we literally end up chasing them for weeks. So it was really reassuring. Of course, she did a great job for the client all the way through. So we really appreciate that. Can you give us a little closing pitch? Because I know affordability is a big, and accessibility is a big part of what you're doing. Talk to us a little bit about that, please.
sure. I'll make it quick so everyone can go enjoy their Sunday. Patricia will be very happy to hear that. She's one of our senior real estate law clerks. She's awesome. She's actually been with us for 7 years. You actually struck upon a really good point here. Our main focus is our partners and our clients. And our partners are lenders, mortgage brokers, real estate agents. And I know that you guys want to get paid because you're working hard. So we really focus on trying to get you guys your commission same day or next day. We usually do direct deposits right into the broker's account. These days, it's a little more challenging with the banks closing at 4, but we put a lot of effort into paying you right away. In terms of our rates, I guess the rates of importance would be our refis are typically $7.99. If it's a private, it's $9.99. We do have a price match guarantee across the province. So a lot of, some firms, I should say, will hide a lot of their fees. We don't. What we do is we use technology. We've got a very good team, and we try to make things really efficient so that we can charge reasonable fees while also obviously being able to run a business. So purchases are $9.99, sales are $7.99, refis are $7.99 unless they are placing a new mortgage, unless they're private, in which case they're $9.99. And that is virtual signups across the province. We have a mobile network as well that can go out to the home if we need to do that. And we also have a bunch of offices if we really need to meet in person. We're still open for business. I have lawyers in all of our offices still when the need arises.
All right, so great firm, Axess Law, AXESS, and thanks Alon Hollander as well, who's doing a great job building the business and connected us. So
He's
again,
wonderful.
Yeah, so thank you for your time. Gerry, any closing thoughts? My co-host for Gerry's Cafe, Real Estate Cafe.
Thank you, Lena, for joining us. Thank you, Tim. I know he's disappeared, but we certainly appreciate their involvement. And of course, David, thank you for putting this on. You make this happen, so we all appreciate this. Thank you for everybody joining us out there. In closing, just, we're going through crazy times. As I mentioned a couple of times today, I think it's important that you really take this time to learn more about the investment marketplace. Just don't rely on somebody to make your decisions for you. Learn a little bit more about yourself. I actually have like an 8-page summary that, in my opinion, explains the investment marketplace in layman terms to somebody that if they want a better understanding, feel free to reach out to me. I'm glad to provide that for free. Just send me an email, go to my website, Canadian Investment Service. Other than that, again, thanks, David. Hopefully people found that informative, and I look forward to doing more of these. So thank you.
All right. It was a lot of fun. Stay well, stay healthy, everybody, and we'll look forward to seeing you next time out. If you have suggestions for the show, give us a shout. We look forward to hearing from you and to seeing you next time. Bye for now.
Thank you. Bye-bye.